Hey everybody, just doing a quick little market update for Bitcoin. I'll start off doing some economic events for this week and then looking at next week since it is Friday the 30th. So big thing today, I know it's not listed here on the sheet, but we do have FTX repayments starting about $5 billion worth of repayments going out today. We've also had about $13 billion worth of actually $14 billion worth of options expiry. So Bitcoin options expiry literally happening in the next 30 seconds or so. Uh, the big thing here is PC index. This is an hour before the US markets open or the New York opens today. Keep an eye on that for next week. Nothing too crazy. We have ISM data, non-farm employments, some of these bigger ones, nothing too crazy in all honesty, initial jobless. Really going into Thursday and Friday, especially with some of the Eurozone interest rate decision stuff coming out, but expected a lower deposit facility rates as well. Going specifically to Bitcoin, so we have had over a month of majority short versus long. We have now reversed that since we've now had our first kind of major breakdown effectively since April. We're now back at majority long. People are smashing the green button as we've broken some stuff coming back lower. So just watch this if it turns into a bigger retracement that could potentially take us to 93 and 92K. On the funding rate side, relatively neutral, bullish, quite low across the board. Some of the big outliers, especially on the token margin side. So token margin, that's Bitcoin being used to long or short Bitcoin. OKX is a big one, and they're heavily incentivizing people who hold Bitcoin to long Bitcoin using Bitcoin. Besides that, it looks relatively neutral, a little bit more bullish. But again, we need to see some upside price action before we see some local reversals back to the upside. On the liquidation side, yeah, we've had this nice big move up. Obviously, it still looks attractive to potentially make new all-time highs. However, we have started breaking into that local liquidity pool, and it only really starts to thin out down here at about 103K, as you can see here on the chart. So if we do have a move down to 103, I want to see that as like a local reversal point. Losing 103, and it's likely that we have bigger breakdowns back to 100K and lower. Realistically, the targets start looking really attractive down towards 93K just because there's a massive amount of long liquidity or liquidations that are there getting a free ride. Going on to the order book heat map on Kayotaka, we had some huge pressure to the upside. So hundreds of millions of orders stacked from about 109K to 109.5 yesterday, forcing price lower. We've got some block down here at 104.6 holding us. There is some potential upside to retest some of these high moves since there's not a lot of liquidity in general to the upside, but we want to see some gains back. I'd be more interested in maybe 106.4 being regained to then potentially do a structure test back up into like the mid 108 area. So looking over to the chart for the general plan in this zone, big thing, obviously, we did have a move higher. This is definitely a deviation of like the overall structure. We had to break back down pretty hard, bearish retest, and now from yesterday we started breaking down and losing 107K. The key zones in this area 110, 107, and 103. 103K, I would expect that if we do get back into this zone, because we have overlapping support daily, 1 hour, 4 hour, everything's right here, that I think we get initial bounce. No matter what happens, we get initial bounces at 103K, specifically 103.1, 103.2. But besides that, you're locally losing levels and breaking back to the downside. So you have broken some trend. If we do start seeing some regains back above some local structure, getting back above daily open, back above previous weekly, 106.4 seems to be an unattractive level to potentially get us back to retest some of these high structures. But in general, right, you have broken down. People are smashing the green button, trying to catch the long. That's never a good sign, even though the funding rates are quite neutral. I'd want to see some confirmation of regains to come back up to retest towards the weekly open 109, 110. Any gain of 110 is likely to see a move to test the highs and probably make new all-time highs. But between now and then, we've lost the low of the previous range here at 107K. I'm not super concerned until we start gaining 106.4 and then 107K back. That would be the first kind of like move that's indicating that we're breaking back into that upside range. Until then, you've broken down, you've made new lows and gone lower. We're seeing some support here around 104.5-ish, like really light tests. It is very, very oversold in this 4 hour structure. But remember, because we have broken down, we are technically still looking for rejections to go lower until we see some regains that invalidate that kind of short play. So in general, the higher time frame still looks relatively bullish and good to the upside. The real test comes into play if we're coming back to 103K. And like I said, we're very oversold and overdue for some correction. I'm still waiting for the triggers, 106.4, 107. Then we can look to do some retests back to the upside. But until then, just watch it. Pretty strong, decent breakdown. We have good amounts of liquidity and liquidations underneath us, and we have an overlapping area down here at 103. So until we get some conditions met, 106.4 and 107K regained, everything is a potential retest bearishly to come back down towards 103, where you want to see really strong steps to the upside. The loss at 103 will start breaking high time frame structure, and then that loss is likely to see moves down to 99.5, eventually down towards this kind of 93, 92 zone, which is a heavy, huge liquidation area. But we're still highly above it. We're well above 100K still. We saw lots of levels to test below us, so I'm not overtly bearish until we really start breaking 103. And then any bounce from 103 that's bearish and then secondary loses that level, yeah, then it's off a cliff, and I'll see you guys back in the low 90s. Until then, you can bid higher lows if we see regains. Otherwise, you should be a little bit locally short off of the failures at 107. Until then, take it easy, and I'll catch you guys next time. Peace.